Understanding time and price is the final piece of the puzzle you need to become a profitable trader. So if you give me 60 seconds of your time, I'm going to be sharing with you 3 ways to implement time and price into your trading that's gotten me over 7 figures in funded capital. One of the simplest and most impactful ways to implement time and price in your trading is by identifying previous session highs and lows. These time-based areas of liquidity can be super important in identifying where we're manipulating in the market, as you can see in this example. We swept out both the Asia session low and the London session low. Your previous session highs and lows can also be super beneficial in identifying draws on liquidity from these manipulations. Now, when you're trading, your previous session highs and lows won't always be as clean as this example, so how do you differentiate which ones to use for a manipulation and which ones to use as your draw on liquidity? That's where we can use our next time-based confluence, which is the True Day Open. Your True Day Open shows you time-based discounts when we are trading beneath the True Day Open and time-based premiums when we're trading above the True Day Open. The True Day Open plays a crucial role in determining what executions you're going to take. If we look at our example here, you can see we manipulated and swept out our previous London session low beneath the True Day Open in a time-based discount. And we have our previous session highs resting above our True Day Open in a time-based premium. So since we've identified this manipulation in a time-based discount, we have resting session liquidity in a time-based premium, we can have a long bias because we know we don't want to take a short position when price is overextended to the downside. Now, in order to actually capitalize on this bias and to be able to take an entry position, we can introduce our third time-based concept, which is the open high-low close. We know that every high time frame candle has to form a bottom wick and a top wick. Since we have a bullish bias, we can capitalize on the idea that our next high time frame candle is going to open and manipulate lower into a PD array beneath our hourly open in a time-based discount, putting in the low of our hourly wick before we distribute towards our draw on liquidity and close. So if we come back to our example here, you can see that the 9 a.m. candle opens and manipulates lower, sweeping out an internal level of sell-side liquidity. And as our final confirmation to show that this should be the low of our hourly candle and that we're ready to distribute to our draw on liquidity, we can simply wait for an inversion fair value gap or a change in state of delivery to take your entry position. And as you can see, if we were to enter at that inversion fair value gap, our take profit would have been hit for a little under a 2-to-1 risk to reward. If you guys want to know more about my 3-step distribution model that I trade, I made a checklist that you guys can use to follow along with while you're trading. And to receive this checklist for completely free, all you have to do is follow me and comment the word checklist, and I'll send you the PDF.